In the magnificent picture of global finance, there have always been dark corners rarely spoken of. People often only see the glamour of skyscrapers, the constantly flashing red and green of market tickers, or the images of wealthy investors. But behind the scenes there are always secrets, scandals and frauds of the century that have left the entire world in shock. One of the most seismic events was Enron, the giant American energy corporation, once held as a model of business success. In the late 1990s, Enron was considered a star on the stock market, with its share price soaring. But then it was discovered that this entire prosperity was just a glamorous facade. Inside, Enron had used every accounting trick imaginable to hide debt and inflate profits. When the truth was exposed in 2001, Enron collapsed in just a few weeks. Tens of thousands of employees lost their jobs, and billions of dollars of investor money evaporated. This incident shook faith in the auditing system and forced the US government to drastically reform accounting regulations. But Enron was not the only case. Bernard Madoff, former chairman of the Nasdaq Stock Exchange, was once a powerful figure, respected by all of Wall Street. Yet he ultimately became the biggest fraudster in modern financial history for decades. Madoff operated a massive Ponzi scheme, using money from new investors to pay returns to older ones, creating the illusion of an investment fund that never lost. When the scheme unraveled in 2008, the losses amounted to over $60 billion, and thousands of families, charities, and even major banks fell victim. The Madoff case was not just a financial crime, but a bitter reminder that greed and blindness can easily lead people into a trap. In Asia, another name that shook the financial world was Evergrande, the giant Chinese real estate conglomerate. With a strategy of massive borrowing for expansion, Evergrande developed numerous projects and created jobs for millions. But as the debt burden piled up and China's real estate bubble began to burst, Evergrande fell into crisis. Hundreds of thousands of home buyers were left in a tragicomic situation, with their apartments never completed. This event not only affected China, but also raised fears of a new global debt crisis. The secrets of global finance also lie in the covert wars few know about. There are currency wars, where nations deliberately devalue their currencies to gain a trade advantage. There are giant hedge funds that silently manipulate markets, causing the currency of an entire nation to plunge into crisis. There are tax havens, where enormous sums of money are hidden in the shadows, far from the eyes of governments and the public. And there are underground networks, where dirty money from crime, smuggling, and corruption is laundered to become legitimate capital that permeates markets everywhere. These scandals reveal a truth. Finance is not just a tool for development, but also a weapon that can be abused. It can become a tool for fraud, for concealment, for manipulation, and even for controlling society. The world has fallen many times due to such shocks, only to stand up again, reform, and tighten regulations, just for new actors to one day find new loopholes to exploit. And like a cycle, global finance always moves between two extremes: the light of prosperity and the darkness of secrets. It never stops, never allows anyone to rest on their laurels. Because in this world, just one wrong decision, one concealed deceit, or one unexpected event is enough to push millions of people into misery. If finance is the lifeblood of the economy, then financial crises are the sudden strokes that make the entire global body tremble. Human history has witnessed countless such episodes, each leaving deep scars and costly lessons, but also paving the way for new reforms to make the system stronger. One of the earliest recorded crises was the tulip mania in the Netherlands in the 17th century. At that time, the newly introduced tulip flower became a symbol of luxury and nobility. People bought and sold tulip bulbs as if they were assets, and prices skyrocketed to the point where a single bulb could be exchanged for an entire house. But then, like all bubbles, when excessive expectations shattered, tulip prices plummeted, countless merchants went bankrupt, and many families fell into debt. The tulip mania is not just a comical story from history, but the first proof of the danger of collective greed. The 20th century witnessed a much larger earthquake, the Great Depression of 1929. It all began on Wall Street, when the US stock market crashed. Stocks lost value catastrophically, and millions of people were wiped out. In a matter of days, banks failed in droves. Factories closed and unemployment was rampant. The crisis spread globally, creating a bleak decade of the Great Depression, and indirectly became one of the causes of World War II. This was a harsh warning that finance not only affects the economy, but can also ignite wars and political turmoil. Entering the 21st century, humanity once again trembled before the 2008 crisis. It originated from the real estate bubble in the US, where banks lent money for home purchases recklessly. High-risk loans were packaged into financial products and sold worldwide. When the bubble burst, millions lost their homes, numerous banks collapsed, and global confidence was severely shaken. The 2008 crisis showed that financial innovation, if left unchecked, can become a double-edged sword that can slash the very economy it was meant to serve. In Asia, 1997 is also a painful memory. The Asian financial crisis began in Thailand, when the baht devalued, then spread rapidly to South Korea, Indonesia, and Malaysia. Nations once hailed as Asian tigers suddenly fell into recession. Their currencies depreciated, and millions of jobs disappeared. This crisis taught the lesson that over-reliance on foreign capital and a lack of control over the financial system can make an economy vulnerable to attacks by hot money flows. Today, many experts warn that the world may be entering a new cycle of crisis. The enormous public debt burden of many countries, political instability, climate change, and the rapid development of financial technology could all create unprecedented shocks. When a major country falls into a debt crisis, the chain reaction will spread globally, causing even the smallest economies to bear the consequences. These crises show US an immutable law. Finance always moves in cycles, with periods of prosperity and periods of decline. Each decline brings pain, but it is also an opportunity for humanity to reflect, correct, and move forward. The question is, have we truly learned the lessons of the past, or will we continue to repeat the same mistakes in a new form? Because finance, in the end, is not an inanimate machine. IT is operated by people with their greed, fear, hope, and even their blindness. And as long as humans possess these emotions, financial crises will continue to recur, like relentless storms on the ocean of the global economy.